Clarity news is here, and today we're going to be breaking it down for you because we may have a rug pull in play. Could it be good news? Could it be bad news? We'll give you the insight on all of this. Before we get started, I do want to thank our sponsor, and that is BTCC, where you guys can get into trading some of this volatility, and you can do that by using our link. You get a 10% one-time bonus on your first deposit. So get in there, do that. You also get some discounts on your trades and a whole slew of benefits just by using our link. Get started out there. No KYC right now, so take advantage of that. I'll explain that here in a second because it's going to get interesting as we start to see things going forward. Senate Democrats, of course, are meeting on the crypto market structure bill to discuss today at 2:30. This is ahead of the White House stablecoin deadline of March 1st. And let's just make a reality known. The White House has already pretty much put this out there that this is going through. And if you look at the clarity opportunity within Polymarket, right there, it goes from what was around 45% or so, skyrocketing above to 65, and now here we're holding at 70% in terms of clarity going through. And there's one reason, guys, and one reason only. That is that the White House has sided with the banks to ban stablecoins. It's that simple. Ban stablecoins in terms of yield. And this is the issue that we are facing right now. With all this happening, you've got Coinbase getting a little bit of selling pressure easing. And of course, this is a lot of people looking at, do you buy the dip, and where we are right now and have been seeing, and of course, the recovery opportunity that could happen once clarity goes through. And let's take a look at something, because this is the issue that pretty much announced it all, and that is that Jonathan Gould, who is coming in from the OCC, says the goal is a system where stablecoins can flourish in a safe and sound manner. This essentially is being dictated to by the OCC in terms of the fact that yields will no longer be available. This is why we will see clarity go through. And here it is right from the Comptroller himself. I'm proud to give you guys works a month that the OCC team has done to develop this proposal and rule. Looking forward to continuing to embrace the innovation. And this is implementing the Genius Act issuance for stablecoins, which of course takes Genius and puts it into play, which has already been approved. But the key here is now it starts to go into effect to all of these different banks, etc. And this is the other factor that you got to look at right here. Here was Cody Carbone, which I was surprised Cody jumped in on this one, but here he is. We appreciate the U.S. OCCC. Has thoughtfully engaged with our members throughout this process. We look forward to submitting comments and continuing to serve as a resource around all of this. And remember, the issue here is that the OCC has simply said there will be no stablecoin yields. This is now banned. The obvious situation is it puts a lot of pressure on the markets, and I think in general this could be a good thing and a bad thing at the same time, depending on where you fall. But it could be good because it's going to get, of course, clarity through. But it does start to put a lot of pressure on what will be the winners. And I think this is interesting right here. Stablecoin interest gone. Winners are bank deposits are obviously going to be the big winners here. But then you're also looking with Visa and MasterCard, particularly Visa Direct, which is what I think will be intriguing to watch, because nobody's going to want to hold funds in stablecoins without interest. And obviously people would not be switching if that's not the case. So bank flight, gone. Don't worry about that. Here was an intriguing thing, though. This was from Wu Blockchain. Metamask has now partnered with MasterCard to launch a payment card in the US, and this is featuring on-chain rewards, okay, so we'll call them what you want. But this essentially is a Metamask credit card requiring KYC. That's how they get you. This was a question on to Grok of, was all of this bullish or bearish for Coinbase? Some people could say, well, Grok says, yeah, we think it's bullish for Coinbase because it's going to get this through, and Coinbase's business is going to be able to proceed forward. You're going to see a huge onboarding opportunity. And if you look at that side of the business, yes, it is bullish. If you look at the bad side of it, is the revenue coming in from stablecoins and stablecoin yields is absolutely torpedoed. So that in essence is kind of a win and a loss. Granted, I think most people would say that the trading opportunity is probably greater for Coinbase than it is in terms of the stablecoin sites, but still, it's bad for you as an American because you're not going to be able to get those yields coming in on stablecoins. The OCC's proposed Genius Act blueprint This is essentially coming in from the White House and what it means for stablecoins. Here it is. I want to scan down into a few points. The OCC goes beyond the statutory text with a sophisticated anti-evasion framework. Remember those words, because it gets into it. The OCC explicitly reserves authority to challenge arrangements not captured by the presumption, meaning they kind of can set their own rules, is pretty much what this is saying. So when you look at timing, this is very critical because this pretty much says that we're going to have implementation of clarity through probably immediately. We could have as early as tomorrow. And because they're essentially setting it up right here. So the timing, intriguing right here. Other things that I want to kind of focus in, crypto industry's best argument for preserving yield through the Clarity Act may have been preemptively addressed by the regulators. So that in itself kind of hits home. A 60-day commitment window is the industry's opportunity. This is kind of where we stand right now, but I think this is all but done. It's just a matter of getting it through Congress now and signing off on it. Banning of stablecoin yields will happen, and that is I guess the situation that whether you agree with the banks, because this is something that I think we have kind of been looking at for a while, was some of these statements coming out of the White House, especially around March 1st, was this more a warning to banks? No, it wasn't. It was a warning to Coinbase. It was like, hey, get on board because this is coming. And sure enough, we find out that in fact it truly is. So when you look at this issue that of course comes out, I just wonder how midterms is going to play out, because I feel that Coinbase will most likely feel as though they have been rug pulled. And this is most likely not going to be our last fight, because there's going to be a lot more coming down the pipeline. And the banking lobby is trying incredibly hard, I would agree, to harm consumers and protect their moats, which is what's happening right now. And so far, guys, they are winning. Speaking of winning, here is Elizabeth Warren attacking Sam Bankman-Fried, and she's going after his statement right there is that he was kind of jumping on the Clarity bandwagon saying, hey, I tried to push this through, of course, the fact that he was a big fraud and a lot of wrongdoings involved. But the idea that he was even bringing this up was kind of ludicrous. Even Senator Lummis also kind of jumped in. Someone looking to pardon is really what he was after right here. My legislation could be far more different than the bill you tried to basically buy from Congress over my objection in 2022. And that of course, was SBF. Do you think SBF will get a pardon? Just say yes, pardon, no, pardon, down below in the comments. I can't imagine that he would. If he gets a pardon, this would be endgame, I think, for crypto. I don't know how that would be any kind of good news. Also remember that the Pentagon is infringing even further as we get a final author to Anthropic. So this is crazy, guys. We're now Anthropic seeking unrestricted military access of AI capabilities. And this is all of the AI companies that are out there basically handing over the keys of many of the AI tools that you're using today. So just remember what you're doing in AI. Nothing is private. Remember that, guys. Nothing is private. Nothing's private in your Gmail. Nothing's private in your email. If you're not using Proton Mail, a Cape mobile device, and a handful of others, if you want privacy, you're going to need to take a different approach, because this is getting all centralized right now. Let's get into some other rage coming in from the rage. And what they're talking about is Senator Tom Cotton, who is trying to push out that this would be a new addition to the Patriot and the Bank Secrecy Act that would prevent illegal aliens from opening up accounts in U.S. financial institutions. I didn't know that you could open an account in a U.S. financial institution, but if this is something where you're looking at the unbanked, this is going to drive more and more of this out of the traditional finance system for sure. Let me go to a clip real quick, because this gets into Jimmy over at Mr.Beast, and I'll explain why, because this is a big deal, because I think awareness and reaching the unbanked, and just in general, people who are not necessarily in the system as much, might have a shot. Take a look at this.
You care about the future of BitMine therefore?
I do. BitMine is a leader in the Ethereum staking market. And if you think about stablecoin and the ability to provide a lower cost of capital and pass that on to the consumer, Ethereum is the backbone of stablecoin and the blockchain. And so we're big fans of Ethereum. We think the DeFi movement is really important, and the benefits that it brings consumers in greater access, democratization, lower cost of capital, the ability to move capital around the world in a safe and secure way.
Long term, how many different businesses do you think you can be in?
When you have 1.45 billion users, there's a lot of share of wallet that you could gain.
So the point of that clip there was really to kind of outline what Mr.Beast is trying to do with Beast Industries. As you guys know, we've reported that here, and this is something that Jimmy at Mr.Beast has been trying to do, and that is making finance become easier to access for everyone. And I think crypto is going to be the way that he does that. It'll be intriguing because remember that he's a global phenomenon. So this is going to reach a lot more than just the United States, but it will bring, I think, the next generation into blockchain. And whether or not we see it in traditional methods, which are basically being painting us into a corner right now into the traditional financial system, because that's really what is happening. All of crypto is being herded into the TradFi system that has existed for 25 years. That is why I think you're seeing the kicking and screaming in the industry of people that know, but this is going to cause a bag pump. This is going to cause crypto to go up. The real question is what does it do long-term overall? Do we still get more Jane Street kind of activity out there? Those kind of things for sure. You can go further into this because Kalshi just did the same exact thing, and this was in reference to an inside trading issue that occurred. Again, this was, if you haven't followed, this was an editor with Mr.Beast that got caught inside trading. The thing that was interesting to me is that Kalshi could enact these fines upon a user. And of course, this was all in alignment with the CFTC. So I just wonder if Kalshi is now getting into a position where they're giving more fuel to their competition for a decentralized model and possibly an exit out of traditional prediction markets. Be on the lookout for this. This could be a big one right here. And you know, when you look at this, it wasn't just the fact that they got him for this. It was the excessive fine. Remember, the fine did not come from the government. It came from Kalshi. And they used this thing called an aggressive multiplier, which basically was a 5x of a $4,000 trade. So this guy literally got a 500% penalty for doing this. And it was all enacted within the Kalshi ecosystem. So I don't like those kinds of moves in the sense of regulation framework because it does create, I think, very bad blood and bad faith in the industry, especially when there are alternatives as we start to see other countries starting to rise up in this area of decentralized finance. And here in the United States, it's all centralizing into bank and traditional finance and, of course, regulatory frameworks. Here, speaking of that, here's Mike Selig. He's talking about our exchanges are the CFTC's first line of defense. In policy, trading, and prediction markets, this is basically them saying the same thing. We're going to enforce all of this, and this is where you guys need to be very, very careful in trading any of those kind of deals. Here, of course, was an interesting issue also because it's starting to shut down cash to Bitcoin because this will start to move into ATM providers now being locked into the sense of where you have to create an ID to be able to actually generate a Bitcoin purchase from an ATM machine with cash. So more pushing into this, and this was the Cato Institute dropping this in there because the Clarity Act would now regulate Bitcoin ATMs under the Bank Secrecy Act and require all of this. Look at the list here. Let me zoom in on this. This would be labeled as money transmitting businesses. Every one of these would be listed that way. So this is going to apply KYC AML measures. You're going to have a limit to activity, one per account. You're going to be required to hold the money for 72 hours before customers could send the money. I mean, come on, guys. This is getting, you understand they do this in China right now. Yeah, this is talking about doing this here in the United States. That is what we're talking about, guys. This is getting overreach at the next level, and it's happening right now. With all of that being said, and I mean, it's kind of like a slap you in the face and then shake your hand kind of situation right now. That's what's happening with Clarity. Where will Bitcoin be by the end of March? Will we see a pump to 85, a moderate side swipe, or some retracement? Let's go with retracement. Everybody's liking the pump. We had Gareth on yesterday. He said we were going to see a moderate pump, possibly 80 to 85, and then look for a pullback. And by end of March, remember, that's 30 days away. A lot can happen in 30 days. Just to summarize, guys, this I think is the perfect statement on X. You only need 2 words because this is inside baseball. Caroline Pham right there simply saying, get ready, because the game is already decided. The OCC has put down the playbook, and everybody's going to play ball this way. And of course, Coinbase is on the out on this one. I want to see how they play in the midterms. We'll be covering that, so make sure and stay tuned for that one. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.